Danny, in 1 minute, what is the bullish case for Bitcoin miners over the next 12 to 18 months?
Oh man, hot one right out of the gate. So I'm going to unpack it a little bit. I'm going to try to get this in 1 minute, but I think it's important to establish a little bit of foundation around this question. So if you think about what are Bitcoin miners doing, they're constantly creating Bitcoin. ASICs are consuming electricity, which is the cost side of that operating equation, and they're producing Bitcoin, which is the revenue side of that equation. For a 1 minute answer, let's assume that costs are fixed or relatively fixed. Now, that'll vary a little bit based on your mining setup. If you're operating in a regulated or deregulated energy market, you could have commodity price variations, so on and so forth. But if you're mining with Blockware, for example, your costs are fixed for the term, effectively fixed for the term that you choose to contract for specific miners, right? And then revenue, both on a Bitcoin denominated basis as well as a dollarized basis, revenue is going to be variable, right? And on a dollar basis, just to unpack that a little bit, on a dollar basis, Bitcoin price go up, your profitability as measured in dollars goes up because what you're mining has a higher, dollarized value if we're using that as the measuring stick. On a Bitcoin denominated basis, difficulty is the variable, right? And what that means is more hash rate on the network, less Bitcoin awarded per miner, and vice versa, right? So the net is that as a miner, you want Bitcoin price growth to outpace difficulty or incremental hash rate on the network. I think that'll probably be a decent setup for our discussion here, and I'll tell you what I think is going to happen and why this is so bullish. So let's look at an S21 Pro as an example, which is the most efficient air-cooled miner ever released, which is mining Bitcoin at approximately 30-35% operating profit today. Or in other words, it's making Bitcoin at $40,000 per Bitcoin that is worth at present $63,000 of Bitcoin, right? So that's the economic incentive for folks to mine Bitcoin. You are constantly buying Bitcoin at a discount to the price in which you could otherwise buy Bitcoin. So what do I think happens? I think that the Bitcoin price is going to go up. And if we talk about 3 months, 6 months, 12 months, 18 months, I think that the price of Bitcoin will be materially and then significantly and then maybe, catastrophically higher as we look out on that 6, 12, 18-month curve, right? So that means that the operating profit margin for miners will increase, all things, equal. You got to look at, well, what's going to happen to difficulty? Now, this is where you need to look at the ability, the velocity in which Bitcoin price can move relative to the velocity at which difficulty or incremental hash rate can come onto the network. If a nation state says that they're mining Bitcoin, or a presidential candidate, who says they want to make Bitcoin a strategic reserve gets elected or gains steam, or you just have an election in general, right? Or a corporation with a ton of cash on their balance sheet, or many corporations say they want to start, leveraging Bitcoin as a strategic reserve asset. Bitcoin price can pop 5, 10, 15, 20, 30, 50% quickly, right? Now, for a difficulty increase of that magnitude, given the maturity of the Bitcoin network today, it takes time, because for a 10, 15, 20, 30% difficulty increase, you're talking hundreds of millions, if not billions of dollars of investment in land, infrastructure, ASICs, cutting power deals, so on and so forth. The bottom line is difficulty cannot move at the same pace in which Bitcoin can move. All right. So let's just say that, let's kind of round this out here. I know I'm over a minute on this one, but let's say that Bitcoin price is at $100,000 by the end of this year, right? Kind of a bull case. I think so, at least. That moves the operating profit margin on that same S21 Pro from 30 35% up to over 60% operating profit, right? It's a 60% increase in price. So as you look at that, a 60% increase in price, it's virtually impossible to get a 60% increase in difficulty in that same time period. Maybe you get a 10%, 15%, 20%, 30% possibly. But the net effect is as Bitcoin price increases, the operating margins for Bitcoin miners rise significantly. Then there's second order effects here, and this is what we saw really in like the bull market of let's say like Q4 2021, which kind of feels like a similar setup right now. So now Bitcoin mining profitability has soared significantly, and no, right now Bitcoin miners are rigs are relatively very cheap. They're like 25% of the dollar per T price they were at the last peak of the bull market for the latest generation machines. So as the operating margin increases, you get more participants. You get retail participants flooding in. You get more institutions flooding in that want to get this opportunity. More buyers of ASICs make the price of ASICs increase. There is not an infinite supply of ASICs either. So as demand increases, price increases, supply starts to dwindle. Then you hit this supply shock type situation where now you can't get rigs. You're looking at 3-4 month lead time and $50, $60, $70, $100, $120 per T price of ASICs. That's what happens when Bitcoin price, without having in the immediate future, that's behind us. We've got 3.5+ years to run right now. As Bitcoin price goes up 50, 100, 150, 200%, difficulty cannot keep up. Profit margins rise significantly. ASIC prices increase. And those that win the most are those that are positioned in advance of that move. All right. So that was way more than 1 minute, but I think it's one of the most bullish setups for certainly capital efficient miners that you could ask for. And I'm excited about it.
Yeah, I think there's a lot we can unpack here. And to me, what really sticks out the most is a lot of times when people think about Bitcoin mining, they're caught up on the fact that halvings and rising difficulty decreases your Bitcoin denominated revenue. But where I really think about it is in terms of the cost side, right? And you alluded to this at the beginning. Your costs are essentially fixed, right? If you're mining with a host, like you sign a contract and your energy rate is fixed in dollar terms, right? And on a month-over-month basis, there may be, plus or minus 2% in terms of how much power your machine actually consumes. But for all intents and purposes, your energy cost is fixed in dollar terms. So if Bitcoin goes on this bull run, which you and I both agree is likely to happen over the next year and a half or so, and I imagine a lot of the audience is on the same page, your Bitcoinized price of your energy, right, it's going to go way down, right? So the actual Bitcoin that you're mining, you're only going to have to sell a fraction of that to cover your operating expense every month. And something we've kind of touched on a lot in our research at Blockware over the last couple of weeks is this idea of like a mining profit multiple, right? So when because your energy cost is fixed, right, Bitcoin can increase 100%. So if Bitcoin goes from 150% from 60K to about 150K, the profit margins for an S19K Pro go up like something 900%, right?
Yeah.
Because you're going from barely, sort of low margin business, barely in the money, to your cost is fixed, and all of a sudden your dollarized revenue just goes through the moon. And so that's one thing I'm really thinking about here. And then two, like you mentioned, there's not this same level of reflexivity between price and hash rate. And in the 2021 cycle, we saw this play out to a T. So in 2021, Bitcoin starts the year at 30K, ends the year around 70K, right? And it was even lower than that if you go back a quarter into Q4 of 2020. But Bitcoin mining difficulty didn't make that same move until 2022 and 2023. There was this really big lag. And I know there was the China mining ban during that same time period, but a lot of that hash rate came back online pretty quickly. And the Bitcoin price kind of also went down at the same time. So it's relatively moot, right? When you look at total price growth versus hash rate network difficulty growth, there was a delay, right? And that delay is the opportunity for miners, because to actually, the way the price of an asset works is bid asks, right? So if all of a sudden there's no more buyers at 60K, 70K, 80K, Bitcoin can just rip up by many multiples like overnight. But to get that same increase in hash rate, we're talking about physical production of machines manufactured in China, sent across the Pacific to America, real world energy being produced, and these machines getting shipped across the country and actually getting plugged in, like in physical infrastructure being built, like land being sourced, like all of this stuff, these real world inputs, they take time, versus the Bitcoin price is bid ask 24/7. Like price can just, by inherent to its nature, can go up way faster than difficulty. And to me, that's the biggest opportunity for Bitcoin miners.
Absolutely. I couldn't agree more. You're seeing, not to belabor it, but a lot of the hash rate they came on in 2022, even into 2023, a lot of the public mining companies that emerged in these timeframes happened because of the bull market of 2020, 2021. And that all the effect of that was seen in 2022 and 2023. It happened to coincide with a Bitcoin price that dropped, pretty significantly, right? But we're kind of now seeing, like, exactly as you said, they're lagging that's a laggard to Bitcoin price. So right now, those miners that are positioning at the beginning of a cycle with already a massive network where the practicality of difficulty, doubling and then doubling again is mind blowing. How much real world power and money and so on and so forth are required to actually make that happen.
Yeah, 100%. And as the chief revenue officer for one of the top mining brokers in the US, what are you seeing in terms of demand, and how has this evolved after the halving? Are you seeing sort of mostly like existing miners upgrading their hardware and doubling down, or are you seeing any sort of net new demand from new Bitcoiners? What's your overall take on demand and the people buying ASICs right now? If you enjoy this podcast and you want to learn more about Bitcoin, then make sure to subscribe to our free newsletter. Every Friday, we send out insights into macro, Bitcoin on-chain, and Bitcoin mining. Join over 100,000 existing subscribers by clicking the link in the description or going to newsletter.blockwareintelligence.com.
Yeah, that's a great question. So let's kind of put these in two different constituencies. So what are we seeing, miners, folks who have been mining, starting to do? And keep in mind, for the audience, our clientele are primarily retail individuals, institutions, family offices, hedge funds, investment syndicates that don't want to go build their own data center. They want to get access to Bitcoin mining opportunities, don't want to quit their day job, operate this. They want capital efficient hosted mining plays. So for, I'd say, a pretty good chunk of our customers, the strategy has been, look to get out of trade-in. We've got some interesting buyback trade-in programs. Trade out of legacy models like an S19J Pro or WhatsMiner M30S pluses or plus pluses, S19 Pro pluses, right? Which could sound like a foreign language if you're not familiar with the space, but legacy hardware. And now start to position yourself with the next gen hardware. And it's really important and advantageous to do this at the right time in the cycle. Because as I mentioned earlier, ASIC prices are relatively cheap right now. They're 25 cents on the dollar, related to what they were at the peak of the last cycle. It's not unrealistic to think that they can get back to that price, at some point in this cycle. So there's a discount, a major discount on a forward-looking basis, right? And that also is coupled with the fact that the operating margins will significantly increase in conjunction with the realization of, ASIC, price appreciation. So we're starting to see, there's one other factor, as you mentioned, with the halving. Halvings can be a little bit scary. You look like Bitcoin's basically been flat since the halving, right? So it's been kind of boring. Difficulty has increased, marginally since the halving. It's been a little choppy, some big increases, some pullbacks, so on and so forth. But I feel like a lot of at least our clients are starting to look at this like you've got a lot of runway now. There's no looming 50% decrease in mining rewards where I think that's going to create supply shock and Bitcoin price is going to go way up. You don't have to take that gamble. It's becoming more certain right now at least what the rewards are going to be on a forward looking basis. And then you look at this, the majority of the network is not the most efficient mining hardware. So you can get positioned with the best gear at a good price this time in the cycle. Net is we have been seeing, and we're starting to see an increased velocity, especially as Bitcoin price starting to get exciting. There's some macro developments. Looks like we're going to be cutting rates, more liquidity in the system, good for risk assets. Monetary debasement continues. A lot of things that should be helpful to the Bitcoin price. We're starting to see people position themselves right now with miners like S21 Pros or some immersion miners. So yeah, I think we're seeing a major shift right now. And then at the same time, we're seeing some folks come in that are looking at Bitcoin at legacy machines as low premium call options on Bitcoin, where they're giving up a little opportunity cost and buying Bitcoin, maybe a little under break even price by buying previous generation rigs. But I'd say for the most part, we're seeing folks position themselves with the best gear, for this cycle. And this one's a little different. And then I'll get off the soapbox. Is we're actually seeing this transition being led more so by kind of institutionally focused capital allocators like family offices and hedge funds versus retail. Whereas I'd say in the last bull cycle, what we saw was certainly at the top, retail was ripping, right? Like everybody's trying to get into mining now. Realistically, a lot of folks bought the top of the cycle and they did very well, but maybe they paid a little more than they could have paid, had they made a move earlier. So it's kind of like it's a kind of classic like institutional front end positioning in the mining space, which is typically followed by material retail participation.
Yeah, that makes sense. And it's sort of aligned with what I see in the spot Bitcoin market and as well as what the macro environment kind of brings right now, right? Because the overall liquidity in the system, dollar liquidity and all fiat currency liquidity is actually up on a year over year basis, right? Despite there being higher rates. But when you think about retail buyers, the average retail investor doesn't have the same amount of free capital they had in 2021, right? Because they had the stimulus check back then, right? And so despite there being rising liquidity, the retails, they're not here yet, right? I do think they'll be here at some point, but it makes sense that it's just the institutions, right? And you see this in the spot Bitcoin market, right? The BlackRock Bitcoin ETF is just their holdings increase week over week, right? It's these institutions, these family offices getting their Bitcoin exposure versus you're not seeing that same level of demand sort of on the exchange level or for spot Bitcoin in general. So the smart money is positioning themselves into mining, and that makes sense. And when you think about Bitcoin logically, it operates on cycles, right? And so if you are interested in mining, it makes sense to take a cyclical approach. And you bring up a really good point about the halving, right? When it's looming, when it's, a year out, 6 months out, 3 months out, it creates a lot of fear and uncertainty because you don't exactly know what's going to happen. But now that it's happened, right, and there's not another halving for 3.5 years, it's like, all right, like we're pretty much chilling. Like this is as bad as it can get in terms of, revenues being immediately cut in half, difficulty kind of choppy, rebounding, the Bitcoin price flat for the last 6 months. Like in terms of miner revenue, like it's probably not going to get much lower than it is at this moment in the cycle. And so now is really the time to position yourself.
Well, you made a really good point. People always think about number go up. Like humans are I think humans are motivated by pain avoidance, but they chase gain. They chase pleasure. They try to avoid pain. Which one wins? Right. So as you look at the way folks think about, mining rigs or buying Bitcoin, you think about the price going up. Let's talk about buying Bitcoin. You're like, okay, well, price is going to go up. What happens if the price doesn't go up? What happens if the halving happens and you have 6 months of flatness, right? Mining is magical because there are inherent economic checks and balances between the network that provide economic incentives to mine based on the profitability to mine. And it's all about being the most competitive, and you can get that with the lowest energy prices and the most efficient hardware, right? And if you want to go build a data center somewhere with free power where you've got some major hook, in some risky jurisdiction, have at it, right? But most people, what you can do is buy the best gear. And while you're retaining all of the upside that we just talked about, and how Bitcoin price can far outpace the speed in which incremental hash rate can join the network, you're simultaneously mitigating downside risk. I put a tweet out the other day, I think it was Friday, when Bitcoin was pumping, and I'm like, I was mining Bitcoin I was creating Bitcoin at $40,000 when Bitcoin was $57,000. I was creating Bitcoin at $40,000 when it was $52,000, and I'm creating Bitcoin at $40,000 when it's $64,000 Bitcoin, right? My downside is mitigated. And if Bitcoin nukes down 20%, you're going to see logically difficulty drop off, and it's going to be the less efficient miners. So when I look at the setup, I want to maximize my gain potential, but I also want to, minimize my loss potential, or start to mitigate risk however I can. And I think especially in times like this, where, what's the downside operating profit margin realistically with an S21 Pro is going to be like 10%. A lot of people would say the 10% operating margin forever and ever and ever is pretty damn good, right? And that's kind of like the downside. So I think just the risk adjusted nature of Bitcoin mining, especially when you have cheap rigs right now and no major, halving event looming, beginning of a cycle, we're going into what should be a friendly macro environment, friendlier macro economic kind of regime or cycle, if you will. It's like a perfect storm of sorts with a protected downside. So I totally agree with what you're saying, and just want to add that piece.
Yeah, the protected downside piece is actually spot on, right? Because if you're mining with an S21 or an S21 Pro, everybody with a weaker machine at the same electricity rate is going to unplug before you. Difficulty is going to adjust down. And so the stronger miners actually benefit at the expense of the weaker miners. And you actually saw this already play out in the immediate sort of aftermath of the halving, right? On a net basis since April, we're actually difficulty's pretty much flat. I mean, it's gone up, it's gone down, but over the summer it was down somewhere in the range of like 5 to 10% from where it was right after the halving, right? And so that's these inefficient miners unplugging. And so the miners that survived, well, they're able to mine 5 to 10% more Bitcoin at the expense of those that unplugged, right? And so you are hedged to the downside. And another way to sort of think about mining going into the next, the rest of the cycle is you are locking in a certain price that you're effectively buying Bitcoin at, right? Assume Bitcoin mining difficulty goes up 2% a month or so. Well, your sort of blended average cost of production across the cycle is going to probably be somewhere around, I would say, 50 to 70K if you have a new gen machine, just sort of napkin math, right? So do you expect the price of Bitcoin to be much higher than that blended average that you're going to be producing Bitcoin at over the next 3.5 years? Probably going to be much higher than that, right? And so I always see when Bitcoin rips, 10% a day, people are like, my paycheck didn't come in until the end of the week, so I couldn't have bought before the pump, where it's like miners are just always buying the dip, right? You're constantly 24/7 buying Bitcoin at a discount to the spot price.
I think that's a great way to look at it. If you think that Bitcoin, you're basically looking at a cycle with the most efficient hardware where you're mining Bitcoin at, let's just say for the rest of this cycle, if you could accumulate, Bitcoin on a proportional basis continuously for 3.5+ years, let's even be conservative and say 70K cost basis, you're probably going to crush it, right? Do you think that and at some points you're going to get Bitcoin when Bitcoin's 100,000, or if we reach 200,000, right? So it's like, take a little bit of a long view of this. And I really like that kind of summation view of it, is like, look across the cycle.
Right.
What if somebody
Right.
gave you this opportunity? You'd probably say hell yes, wouldn't you?
Yeah, 100%. Now, if someone wants exposure to mining, sorry, I just kicked my camera a little bit.
Are you good?
Why would they mine with Blockware? Why not just buy public mining stocks?
Yeah. There's a lot of factors there. So let's just try to hit on a couple of them. I mean, one is kind of centralization versus decentralization. And fan of the public mining companies, personally own some public mining equities. I like to kind of mix it up. I think balance is important, but just like buying any stock, you've got a CEO, you've got a board of directors, you have competing priorities. Another thing about Bitcoin mining stocks in particular are, look at the way that a lot of this growth is funded and financed is via share dilution. There's some pretty hefty packages out there that contribute as well. I mean, you don't know what the next day is going to look like. Now, I think it's like, hey, you got to fund growth somehow, and if you are in the public market, you basically have to grow almost at all costs to some degree. But you're not in control of the debt. It's the centralization versus decentralization. I think that's one aspect of it. I think another aspect is on the cost basis. You're talking about mining Bitcoin. If you're mining with Blockware, you're not inheriting really any of the corporate overhead that those companies have, which ultimately raise their operating expenses as an entity and contribute negatively to their bottom line. You got a lot of employees, right? You've got investor relations folks, you've got so on and so forth. As a capital efficient miner, it's just, you buy a rig, service for you, you're cranking. Another point that I think is interesting is, you'd probably have these specific stats better than I would, but I read some of these 10Ks or look in the earning calls. Really efficient fleets for these companies are like 22 watts per T, over 20 watts per T.
Yeah, low 20s is like the high bar
Yeah.
for the pubcos.
And for those who don't know what that means, that's basically the electricity efficiency of a machine. How much does it cost to create Bitcoin relative to, irrespective of the energy price? How much energy does it take to create Bitcoin, right? And you want that number to be low. So, low 20s is a good number. That's where the top public mining stocks are. S21 Pros are like under 16 watts per T. So you're actually, if you do it yourself, you can be way more efficient than these public mining companies. You can more or less operate at a very similar net operating costs from an energy perspective, because you're inheriting a lot of the overhead that those companies have, so on and so forth. And you can actually do it with ASICs that are more efficient, right?
Yeah.
Because again, they're playing long games. They bought hundreds of millions of dollars worth of ASICs, 18 months ago, 12 months ago, 6 months ago, 3 months ago, 3 months from now, constantly buying. So they're trying to get their blended efficiency down. You can be more agile and nimble, right? So I think that's economically why I do it. But just to even take a step back, it's really easy, right? Like, you get exposure to Bitcoin mining without any of the headaches, that do exist with running Bitcoin mining facilities. And then with our marketplace, kind of change the game. You have not only this great, kind of profitable operating setup, but you also retain liquidity, or the option to seek liquidity via the sale of your machines via the Blockware Marketplace, which continues to get hundreds of signups, every week. It's growing like crazy. It's becoming, we're our mission is make ASICs tradable assets, and we're seeing it come to fruition, and it benefits all parties of that trade. And when you get two sides that are equally incentivized and motivated to do a deal, deals happen, right? And as deals happen, both folks are winning, so on and so forth. So make it really easy. You control the economics, and you don't have to worry about decisions being made that you might otherwise have to if you're looking in public equity markets.
Right. I think that's a really good summation. You effectively, with hosted mining, you get to be kind of your own mining company, right? You get to choose when you're buying machines, what machines you're buying, and what your overall sort of strategy is. And you don't have to worry about your shares being diluted. One more point I would throw in there is with hosted mining, it's Bitcoin in, Bitcoin out, right? When you're trading equities, it's cash in, cash out. And as a Bitcoiner personally, my goal is to accumulate more Bitcoin, as much Bitcoin as possible in my cold storage. And with actually mining yourself or hosted mining, you're getting those Bitcoin rewards sent to your wallet all the time, right? Versus if you're trading these equities, all right, let's say you buy a mining stock, it goes up in Bitcoin terms. All right, you sell it. Now you have to pay capital gains tax, and you have to take it out of your stock account, and then you have to send it to a Bitcoin exchange. You have to buy it, and then you have to send it, right? There's so many different steps to actually get Bitcoin in your wallet at the end of the day versus when you're actually doing hosted mining with Blockware, you're always getting that Bitcoin. You're always like, in my mind, that's taking profits. And so you're always taking profits.
Totally agree. I mean, I think a balance is good, but I think most folks who are buying Bitcoin mining stocks are Bitcoiners, are accumulating Bitcoin, and Bitcoin mining. So long as you can mitigate your downside risk, choose good counterparties, is not even debatably the most capital efficient way to accumulate real Bitcoin into your wallet. And I think we're kind of at the cycle where a lot of, FTX, everything, a lot of people got burned out last cycle, which is what happened, especially on the retail side. Now we're starting to see a lot of folks come back in, but they're coming in via Bitcoin proxies, mining stocks, MicroStrategy, great plays, right? But they're kind of missing a little bit exactly what you said. Like, you can mine Bitcoin, and that's the best way to accumulate Bitcoin.
Yeah.
Right. And then, you want to buy some mining stocks, you want to do MicroStrategy, ETF. Like, there's a number of different ways to play this, but not mining Bitcoin is frankly just doing a balanced portfolio a disservice, because it's the most capital efficient way to accumulate Bitcoin, which is the greatest savings technology ever created.
Yeah, that was well said. Not mining Bitcoin is doing a balanced portfolio disservice. I really like that. All right, so if you're listening to this and you want to mine Bitcoin, why is Blockware the best way to do that?
All right, yeah. I mean, we've been doing this since 2017 in this world, this Narnia-like world of Bitcoin. That's pretty much longer than everybody and most of the public mining companies. So we know what we're doing. We own and operate, as well as partner with a variety of hosting sites throughout the United States with very diverse setups. We have some immersion mining setups. We have, state of the art indoor facilities, containerized. You can kind of pick where you want to be. You can get access to the most efficient hardware. And then with our marketplace, we are mitigating significant risks that were otherwise associated with Bitcoin mining, including lead times, right? All these miners are plugged in mining Bitcoin today. You can start mining Bitcoin today, right? Transparency, you know exactly what you're buying, where that was not always the case, and every rig was not created equal. And then personally, my favorite relative to the marketplace is just that you have liquidity, right? Like, there's a lot of CapEx that goes into purchasing Bitcoin mining rigs. So you get this great operating, setup, in this very profitable operating setup with a lot of upside and a hedge downside. So if you had a way where, if what we just talked about plays out, your rigs are going to be worth a lot more, or at least, what they're worth now in the future while you've mined all this Bitcoin, it'd be pretty nice to have the option, but not obligation, to, sell those machines and recoup that initial capex, wouldn't it? So that's what the Blockware Marketplace enables. So on the balance, very excited in what we're doing, and I think we've got a lot of clients that are excited too. And now's a great time to be positioning. So good stuff ahead.
Yeah, that sounds great. I really appreciate you coming on, Danny. Where can we send the audience?
Yeah, I would say hit up sales@blockwaresolutions.com is big. We're also on Twitter, at Blockware Team. I think we're doing a spaces later tonight, so this will be, not released in the next 15 minutes, I imagine.
Yeah.
But sales@blockwaresolutions.com is a great place to go. My personal email is danny@blockwaresolutions.com. So love to hear from anybody, and always happy to talk with folks that are looking to get into mining or expand their mining operations.
Awesome. Thank you, Danny.
All right, Mitch. Take care, man.